Africa. So thank you for joining us today.
It's a pleasure to be here, Sergio.
Awesome. So I'm excited to hear more about you and your story. If you can share first, what is Atlantica Ventures?
So we're a fund that focuses on tech and tech-enabled companies in Africa. So we invest from the C through to Series B stage in these startups, and we invest with a double bottom line because we believe that investing in Africa, you don't have to actually look for impact and financial returns. It's one of those places where you can actually do both. So we have that as part of our thesis to invest and always look for strong financial returns and a good amount of impact in terms of where we invest in. And we look at different sectors that are tied to the macro forces of the different countries. So the sectors of focus are fintech, which includes insurtech, asset management, payments, etc. We look at logistics, agri-tech, IoT, that's Internet of Things, digital security, and B2B marketplaces. And all of these sectors play well with each other. So you can see a fintech company that has an agri-tech play or logistics company that has an IoT play. And that's part of our thesis when we invest in startups, is to see how they can play well with each other or with other sectors. And we focus on 6 key markets across Africa because Africa has 54 countries. You're not going to boil the ocean. But these 6 markets encompass the largest ecosystems for early stage companies, strong regulatory markets, a good portion of the GDP, about 80% of sub-Saharan Africa GDP. So these markets are Kenya and Tanzania in East Africa, South Africa, and Cote d'Ivoire, Ghana, and Nigeria, where I'm from. So that's what we do.
That's great. And what size investments are you looking to make? And what types of startups are you looking for?
So anything from $150,000 at the seed stage up to about $5 million for Series B. And when we look at Series B opportunities, we always follow on. So that's our thesis. So we start off with Series A at seed stage and follow them on to Series B, but never blanket new Series B. In terms of the startups we look for things that are tech and tech enabled and typically asset light, and we'll look for B2B opportunities. We will look at some B2C opportunities, but we like to focus on B2B.
Great. And I'll ask a little bit more. People talk about Africa is a continent, right? It's not a one country. So you have several countries. There's so much space to cover. How do you all think about deal flow across a continent? Can you share a little bit more about that?
So, well, deal flow across the continent is pretty interesting because we get a lot of our deal flow from the startups that we've invested in. So we get it from startups, incubators that we know, and also startups that we haven't invested in, but we maintain a strong relationship with them and help them go across their life cycle from C to Series A and Series B. So that's how we get a lot of the deal flow. And people ask the question and say, well, you're covering 6 countries. How easy is that to actually do that? And these startups go across different boundaries. So you see a startup in Nigeria moving into Ghana. You see one from Kenya moving into South Africa, because this is how people, information, money flow across these different borders. So it just makes sense for us to actually follow where our customers are, and our main customers are the startups and our LPs.
Got it. Well, before I dive in further into some of your investments in Africa, because I think there are a ton of questions there in terms of opportunity, can you share with the audience? You again, you have your MBA and have a background in engineering, and first forayed in as a product engineer at Lucent Technologies. How did you end up in engineering and now focusing on building a fund investing in Africa? Can you share a little bit more of that story?
Yeah, sure. So did my undergrad at Penn State electrical engineering, then my master's also at Penn State in management science and operations research. So I've always been crazy about engineering and technology. So ending up at Lucent Technologies Bell Labs was just perfect for me. So I joined Bell Labs, and when I was there, I noticed something interesting about the company. So walking through the halls there, you see Nobel Prize winners, anything from quantum physics to biotech and just a whole range of different people. But the company was going through a lot of issues. And it just didn't make sense to me to think, well, a company with a whole bunch of smart people was having issues. And then my manager said to me, he said, IK, it's not about the best mousetrap. You have to actually figure out the right business model. And unfortunately, Lucent didn't have a sustainable business model and was hemorrhaging cash on a regular basis. So this is me as an engineer thinking, wow, this is very interesting. And funny enough, at the same time, when I was at Bell Labs, I was doing my second master's at Columbia University, doing my master's in electrical engineering. But when this was happening, I just thought, this doesn't make sense. Having the best tech doesn't solve it. You need to understand how a business should be run. So I dropped out of that and I switched to my MBA. And that's when I enrolled at NYU to do my MBA part-time, which was hard because I was doing that while I was working full-time at Bell Labs. So evenings, leaving work, going to class, seeing all the full-time students, have fun, leave late, go back home, do some work, then get up in the morning and just rinse and repeat. So I did that for a while. And after I finished my MBA, I wanted to expand my horizon to then say, well, there's more to life than just Bell Labs. I want to see what else that's out there. So I joined a consulting firm called PA Consulting, and they focus on technology and telecom across on a global scale. They're based in the UK, but I was part of the New York office. Very exciting time, and just opened up my eyes to then see exactly what else is out there apart from Bell Labs. And then I joined another consulting firm called Arthur D. Little, which were more of a generalist strategy consulting firm. And majority of the clients at Arthur D. Little were PE firms. And this got me really into the whole aspect of how a PE firm makes a decision to invest in a company, what happens after they invest in a company, and what happens when they try to exit the entire life cycle. So I thought, okay, fine, this is very, very interesting. But there was a frustrating part for me as Arthur D. Little because I would see the decisions that the PE firms would make, and I would think, I would not make those decisions. That we're telling them what is wrong, but yet they're still not going to fix it. So part of that frustration just said was that, you know what, if I'm going to do this, I have to be on the PE side. So I got recruited by a firm called Helios Investment Partners. They're based in London, but they're actually focused in Africa. And they're one of the largest private equity firms operating in Africa today. So I joined them as one of their first employees based in Nigeria, focused on the sectors that I really enjoy, technology and telecom. And that's how I got started into the private equity space because they wanted somebody that understood investments, understood the African landscape, understood technology, and understood operations. So I had all those put together, and that's how I got started.
And can you talk about your shift from? I mean, that's great because it's like being in the UK, still building that expertise of investing in Africa. What made you want to shift from PE to VC? There's more money in PE. What's what not for those or I mean for those that may not be familiar. You're moving millions of dollars, not hundreds of thousands or tens of thousands or depending on what it can be. What
Mm-hmm.
inspired the move into to start your own fund?
Yeah. So just in terms of scale, Helios, at the time I left, I believe the fund size was north of $1 billion, and that was their second fund. So they were sitting on a couple of $1 billion
Woo.
of a fund. Whereas I'm moving into the early stage space that I'm writing sub $5 million checks, whereas Helios would not look at anything of that scale. But
Yep.
what got me excited was just looking at the convergence that was happening in the ecosystem. So it was very exciting. A number of African diaspora were moving back, creating companies that were very, very interesting and exciting. Then you had the infrastructure that was being built in Africa. So telco networks, banks were opening up their platforms to allow people to then integrate with the banks. So you saw a convergence of a supply and demand whereby things were just moving forward. Then the cost of devices was just dropping consistently year over year to the point that what people needed to actually start a company was a laptop and a great idea. So at that point, you started seeing a lot more interesting things happening. But what I also noticed was that startups would approach me and they'll say, "Hey, IK, I'm trying to fundraise for my business. I need XYZ." And I'll say, "Unfortunately, the fund cannot do that. And also, unfortunately, I'm not going to be able to then write you personally a $500,000 check. But what I could do is then write a smaller check, but give you a ton of my time and help you get to where I believe you're trying to get to." So that's how I got started doing that. And I just saw the fact that it was growing, but a lot of the startups didn't have people to help them along that journey. That was the first thing I saw. Then the second thing I saw was some of these startups I invested in did well, went to Y Combinator, and I met VCs that are based in the US, Europe, and Asia. And I asked them, I said, "Well, why are you investing in these early stage companies? Because these are much smaller checks than what you're used to." And what they said is, "IK Africa is the next frontier, is the next opportunity that is a blue ocean. And we want to play in there, but we do not know how to. And we need somebody who is a local partner that we can sit alongside the table with, and understands the market, understands how we think as investors, and invest alongside them." So all that just made sense to say, you know what? Startups need help. I'm helping them. VCs globally are looking at Africa, but they need a partner to then get in. Atlantica Ventures should be that partner, and that's what we're doing.
Perfect. And how much are you all raising?
So we're raising a $50 million fund. Right now, we have soft commitments of up to 16 and a half. We're in due diligence to try to raise that up to $30 million. So we're moving closer.
Awesome. Congratulations on that. And
Thank
can
you.
you share more about how you found your co-founder?
So Aniko Sigadvari, she's my co-founder, incredible person. She was the former head of the global head of the TMT group. That's a tech, media, and telecom group at the International Finance Corporation. That's an IFC, which is a private arm of the World Bank Group. And I met her when I was at my previous fund, which is called Convergence Partners. And she was there as a limited partner, but also as an investor, because through my previous fund, which is Convergence Partners and the IFC, we always looked at deals together. So through that process, her and I then developed a strong relationship and an interest in this early stage space. And we then almost had an epiphany at the same moment that this is exciting. This is the next space. This is an open market, and people aren't really paying attention to it. And there are some people that are looking into it, but they're looking at it from a different lens, whereby unfortunately people think that VC investing is just writing a check. But writing a check is only I'll say it's only maybe a fifth or even maybe a tenth of what you have to do, because you have a 5, 7, almost a 10-year life cycle when you're sitting with that company and helping them through every single instance, because every startup has a hockey stick growth. But once you invest in it, it's a squiggly line, there's a pivot here or there, and you have to then be able to help those startups navigate through this minefield. And not a lot of people have that experience to then say, "I know what you're going through. I've seen this in a number of places, and I have a network that can help you navigate this." So that's why it just makes perfect sense for us to do it, because that's what we're passionate about. And yes, it is a lot harder than private equity because you're dealing with early stage companies. Yes, the management fees and the fund size are a lot smaller, but it's where my passion is where my partner's passion is. And we believe that we're then building something that's very sustainable and exciting for Africa.
That's great. And can you share in how are you sustainably supporting these ventures? I think I hear that all the time. It's like not only about the investment, it's about how you support them and how you take them to the next levels to grow. And of course, there's only so much you can do, right? In terms of capacity of your team, the
Mm-hmm.
founders and the extended team. What are some of the things that you all do for your the current fund and that you plan to do going forward for with this focus on Africa?
And so what we do, a lot of the startups, other than cash is what they need. Some of them have started off as 2 people, 3 people organizations, but then they quickly start growing, and a lot of them have concerns over leadership to say, well, how do I then lead a team of 10 people? Before it was just myself and my buddy. So some of those questions, how do I then create the right incentive program? So creating employee stock long-term plans for them. How do I put that together? Or even when you then want to go into more of the deeper level of the product itself, to say, well, I have a product roadmap. I'm looking at the experience that my customers are having. How do I then ensure that my product market fit is actually what I believe it is, and I don't miss out on certain things? So those are all the different ways we help them. So what we've actually also built is a data science team, because a lot of the startups are sitting on a ton of data, but they don't know exactly essentially what's happening. They see that they're growing, but it's hard for them to actually get on a granular level to then say, here's why I'm growing, and here's how I can actually take what I've done and repeat it because I actually figure out what happened. So we've actually built a team to help them do that as well. So from the back office side, from even from legal documentation, for example, for some of the startups, we sit down there and we look through their contracts because they've signed contracts with customers, but some of them say, well, this is my first time doing it. I don't have, cash to then pay expensive lawyers' fees to help me go through the first cut before I then bring in the lawyers. So it's just being the extra pair of eyes in the hand to just really help them build themselves up as a sustainable business because that's what we hope for them to be.
That's I love you shared that is because you're again taking them along the journey, but it also talks about the infrastructure or the maturity of the market, right? Like there's because there haven't been as many venture capital investments in Africa or those you talk about those 6 countries that you had mentioned. The early stage founders just need to be educated on what some of the norms are, at least in the U.S., right? Or create norms in the space. Can you share more? What one of the things that we found at Rebel One and looking at startups internationally are exactly that. Like the founders need another level of support, and also just one thing I would say, especially in terms of valuations, they usually treat it like they're. I joke and say sometimes they treat it like they're selling goods to a tourist, where they like shoot for a very high price, and you just like from a U.S. investor, you end up just walking away. And not engaging because in the U.S. there's a different etiquette, right? If you wouldn't do that, you wouldn't negotiate your valuation in the same way.
Mm-hmm.
It's a little bit more sophisticated, like looking at comparables or just aiming in a range that is acceptable. How are you all dealing with that? With one, educating founders on appropriate valuations, but also valuing startups in an area that has less infrastructure, is less mature, so it is slightly more risky.
Yeah. So the good thing is that the founders are very well exposed to comparables in other markets. So they'll
Okay,
read TechCrunch and all those different things and really understand who else is out there and doing what and try to draw parallels to their own business. So, but where the founders need help with is just really scaling from a 2-person, 3-person shop to an actual company
got it.
whereby you're paying bills and paying salaries and you're responsible for a whole bunch of different things rather than just you and your partner. So that's where they need more help
Mm,
on than anything else. But when it comes to valuation, that's typically a subject that then gets, you see different sides. So sometimes you see non-African VCs investing, whereby they're less sensitive to valuation and typically would want to then pay higher than what an African VC would then want to pay for because it may not be core to their strategy and might be a smaller portion of their portfolio.
yep.
So their risk appetite is a lot, very, very different from an African VC, whereby we're investing in this and we have very, very strong incentives, not just from a returns perspective, but also from an investment in that individual to then help them grow to make it happen. So that's why from the valuation perspective, you see different sides. So sometimes you see it higher than what you would expect. And it's just always about a conversation. So there's the unfortunate thing whereby they'll say, well, you have to then apply an African discount to a particular startup that you see, because you might see a fintech company in the valley that has raised 20 times revenue, and then an African startup will try to get that, but typically will not be successful. So they'll have that African discount. And the difficulty of trying to explain that to the startups is that you have to just don't look at one dimension, which is I do the same thing they do. Look at multiple dimensions. I do the same thing they do, but here's my growth profile. So I might be growing faster than them. So yeah, technically you should have a higher multiple, but you're in a smaller market and the spending power of those individuals is smaller. So you have to then right size a number of those different things and then get to a number that feels comfortable. So that's a conversation that happens with the startups. And in my experience, thankfully, that they understand that and they want to engage in those conversations. Ideally, yes, they will try to get as high as possible to minimize the dilution. But the feedback we always give back to them is to say you don't want to raise it too high, because when the next round happens and someone else is looking at those numbers, you have to hit those metrics and then justify that valuation. Because the worst thing you want to happen is a flat round or a down round. And that's not going to be good for anyone. So you want to be as conservative as possible and really ensure that what you're proposing is something that you really believe in your heart of hearts you can actually hit. And don't just try to say that just because you're very bullish and you see what's happening in Silicon Valley. We have to look at what's happening in Silicon Valley, look at what's happening in LATAM, Southeast Asia, and build our own model for Africa.
I love that. I think that's advice that could be taken to several emerging markets and some places in the U.S. as well. So that's
Mm-hmm.
great
Yeah.
advice for uh, when you in your as you're getting ready to expand your focus. How is COVID helping or hindering what you're doing? Like how are I think
Mm-hmm.
about I know we're doing more things virtually, at least in the US, but I think even in the, US, looking at Africa, the infrastructure may not be there for, readily streaming and
Mm-hmm.
doing Zoom calls with, with founders from everywhere. Maybe it is, maybe I'm making an assumption here, but, can you talk a little bit more about how COVID's impacting, the founders, but also, how it's affecting you finding startups on the continent?
So in terms of connectivity, thankfully, a number of the major African cities have a decent amount of connectivity. If it's not fiber, then there will be some 4G or through a 3G connectivity there. So I typically get on Zoom calls, Teams calls, Google Meets, etc., all of them. So, and meeting up with them in different markets hasn't been an issue, because even pre-COVID, that's what I had to do, because I would always be on the road and traveling around. So there'll be times that a founder in South Africa wants to have a conversation and I'm sitting in Nairobi. Well, get on a Zoom call and do it that way, or just do a straight up WhatsApp call. So that hasn't impacted our ability to meet startups and to really build a pipeline. I'll say what has happened with COVID, and I believe this is probably the same thing in other places, is that it's accelerated a change of behavior in a number of different customers, enterprise customers, which the startups that we look at are focused on. And because those startups are focused on technology and technology enabled services, which then have a secondary impact on looking at remote work, remote support, et cetera, all those areas, that those startups that we've invested in have now been deemed to be more essential than more discretionary to the spend of a lot of the enterprise customers. So we've actually seen some of those startups thrive during COVID situations, and some that we thought would suffer have been able to actually tread water just because they were still deemed essential and they weren't delivering physical goods or services, but everything was all digital. So looking at our strategy in terms of what we've done as a fund and the sectors that we picked, we've actually picked sectors that have been able to survive during COVID. And we believe that once we come around the corner, that they will then accelerate, because a number of the customers have now adopted their services and they see the value that they have and they're just ready to just accelerate and just move forward.
Got it. That makes that's great. In Especially for the startups that like you said, some of them that may not have there may not have been a transition to more of the digital age, and now everybody has to transition. So
Mm-hmm.
so those startups become more essential. Um, for you all, what are there particular areas? I know, we have this geographic focus, and you said more tech enabled than product.
Mm-hmm.
Are there particular industries of focus or themes that, for Africa specifically, that you think are that you're more bullish on in terms of looking for investments?
So our key sectors were fintech, logistics, IoT, agtech, digital security, and B2B marketplaces. Fintech has been the darling in Africa from M-Pesa days and days with Paystack, Flutterwave, Migo. So the ability to facilitate ease of payments, the ability to provide loans for the average African has been very, very difficult. But there's another area that we see that is now growing, which is more in the insurance space, which is extremely exciting for us because it's almost looked at as the forgotten cousin in the fintech era. So banks and everyone else and asset management companies and digital banking gather a lot of the attention, but insurance as an asset class hasn't received any attention or investments in terms of digitization. And that's an area that I think is very, very exciting because that's the next step. Once individuals feel wealthier, but once individuals also then have a sense of risk factors in their life, insurance is going to be the next thing they start looking at to then say, am I really protecting myself in the right way? And then when you look at the insurance companies themselves, they've been completely ignored from the digitization wave that has swept across the continent. Even I'll just even say not even just Africa, but in most other areas. So we see insurance as an interesting area to then keep an eye out on. And the insurance space is a blue ocean, and just finding the right company to then really crack the model there is going to be something very exciting.
Awesome. And before we before we close, one of the questions was interested in is for people that are for LPs interested in Africa, they'll find Atlantica Ventures. For people that may not be in Africa that are looking to start talking to startups, what advice do you have for them? Where do they go, and how should they reach out to ventures to support ventures in Africa?
So for people who are interested in working or investing in startups in Africa, I would say the most important thing, which is going to be kind of hard now because of COVID, is to be there. But the next best thing is to find someone who is active in the ecosystem, either an established startup or a VC fund, and really have a conversation like this to then say, well, what are you seeing that's different? That you've seen investments in different markets. What makes Africa exciting for you? And you know what I look for as an investor or as an individual, where do you think my talents or my capital can be best placed? And because people would have, different things to add. Some people may just have their time and a lot of knowledge that a lot of these startups would love to have access to then sit down and pick someone's brain, have a conversation with VCs, have a conversation with angels that are operating in Africa, and just say, hey, I'm interested, I'm available, here's what I can do. How can we have a conversation and talk? So I said that's the best thing to do. Find VCs, find angels that are investing in that space and talk to them because Africa is not a scary place. It's a place where you can actually make good returns and do good at the same time.
Awesome. So, well, thank you very much for giving us a little insight into your story and also Atlantica Ventures. So, for everyone watching, this was Rebel One Live. IK Kanu, who is the founding partner at Atlantica Ventures. Thanks for joining us today. You can also find a link to his fund in the